Actually, I do not give much importance to this ROC and ROCE and all, ROE and all.
Across your investments?
Yeah.
You've never bought a
Initially,
stock based on these?
Yeah, based on these, I never bought any stock. It should be reasonable. You cannot get a small company, you cannot get a ROC or ROE of 20 or 25. Then stock would also be expensive.
So, if you understood Mr. Vijay Kedia's viewpoint, you will get very scared that on one hand we have Mr. Saurav Mukherjee who keeps on saying that invest in high ROCE company, and here is Mr. Vijay Kedia who says that I don't even look at ROCE, ROE and all these different measures before making any investments. The point about this short anecdote is fairly simple, that every investor in the stock market is unique. You will start out with your own set of goals, own set of risk appetite, and accordingly you need a personalized investment plan. So on today's video, I will present my personalized investment plan for you as to how I make investments that are right for me. I will explain you the asset classes across which I have made investment, how much, and why have I made all those investments. I will not give you the real number of my portfolio size because that is besides the point. But it is always a fun exercise for me to guess how much you think my portfolio size is. So comment below and let me know how big my portfolio size is. But for context, do assume that my portfolio size is big. Therefore, I have invested across a range of different assets and different types of instruments. So with that said, let us get the video started. And so first and foremost, let me give you an overview of my portfolio. So my portfolio percentage is that if I have 100 rupees, then 75 of that is invested in stocks across India and the US. That is where majority of my stock holding is. I have invested in some hedge funds also that give me global exposure. Through these hedge funds, I am not managing my own money. The hedge fund manages my money, but they are taking position mostly in stocks. So all in all, I would have 75% in stock holdings. 12 to 15% right now is in crypto. I do these investments directly and my goal is to take up my crypto portfolio up to 20%. Why is that? I'll explain that subsequently on the video. Third and finally, rest 13 to 15% of my investment is divided into real estate and in startup investing. So I'm an angel investor. I invest across a range of different companies. So this is what my overall portfolio looks like. But very important for context, you need to understand what type of an investor I am. So first and foremost, I am a growth-oriented investor. Why is that? Because I am on the younger side. Hopefully, I still have a lot of time. So therefore, I can afford to take a little bit of risk in my portfolio. So my portfolio is slightly aggressive. So this is point number one. Point number two, I am a diversified macro investor and Mr. Ray Dalio has had a lot of impact on me. I have grown up reading a lot of his commentary and macro style of investing works best for me. Now, why macro style of investing and what exactly is macro style of investing? So essentially, I am mostly a mid to long-term investor. I identify good businesses because that is one of my niche. I have been a management consultant where I used to analyze businesses. I am an entrepreneur. I invest most of my active time in terms of running my active businesses. So I understand how businesses are cultivated. So therefore, I feel easy in terms of figuring out what the business moat is. And therefore, I do mid to long-term investing, taking a look at the macros of the company, macros of the world, macros of market cycles. So that is how I structure my investments. One primary reason why I'm doing this type of macro investing is that I don't want to be glued to my screen. I want to get up whenever I feel like, and if I become a trader or if I am dependent on the stock market to make money all the time, then I will be glued to my screen day in and day out. And that is not a very healthy lifestyle that I would like to pick. So therefore, my investing style in the stock market is that invest very little time in terms of making investments in the stock market. Do your research, do your businesses, run different things, and whatever money I'm making, I will put it from a long-term perspective in the stock market. I don't want my job to become a full-time market person. So I have made investments across 5 asset classes, and let me speak about all these asset classes one by one. If you get an understanding of why I have made these investments, then probably it would make sense for you to pick some of these points and incorporate it into your own portfolio. So let us start having that discussion. The first major asset class for me is stocks, of course, because that is where majority of my money is. And in stocks, if I have invested 100 rupees in stock, then 75 to 80 rupees will be invested in the Indian market and rest 20 to 25 rupees will be invested in the US stock market. Now, what type of companies do I purchase in India versus the US? Let me give a very quick commentary there. So within India, my bet is that Indian economy will grow. I am very bullish about the Indian economy. I have said it time and again. Yes, there will be phases when Indian economy is not doing well, but that does not change my perspective about the Indian ecosystem. It is growing really well. The business environment in India is positive. Yes, there are a lot of shortcomings, but net, I'm very bullish about India. So if I'm bullish about India and if I'm cued into the economy, then I will bet a lot of my money in the finance sector. That is where I have taken 50% of my positions within the Indian stock. So this would comprise of banking stocks, AMC stocks, insurance stocks. So these are the type of finance companies that I would purchase. My favorite companies within the finance domain are something like Bajaj Finance, something like HDFC Bank. These stocks I have in large amount. But the key rule that I follow is that I never allocate more than 5% of my money on one single asset ever. No matter how much trust I have on that asset, I will never violate that 5% rule that I have set for myself. The second categories of stocks that I purchase within India is the FMCG sector. And this is the defense sector for me. So defense sector simply means that this is like a hedge for me. Yes, of course, when you are investing in the equity market, for example, I'm talking about stocks, which is equity market, inherently there is a lot of risk in terms of investing in equity. But again, because I'm a growth investor, I'm taking positions in the equity market and I'm not bothered too much about the bond market. You will say that Akshat, in the past you have spoken about investing in bonds, but I did not make those investments for me. I made it for my parents. So there is a huge difference in creating a finance plan for me vis-a-vis my parents. So please understand that key difference. So in order to hedge my portfolio, I have purchased FMCG stocks. This would comprise of companies like HUL, Nestle, and bunch of other cash flow based businesses or FMCG stocks. My final purchases could be lumped into rest. Here, important point to note is that I have 0 positions in tech in India right now. All my tech positions are in the US. And in the US, I only do tech investing. That is it. I do not purchase any cash flow based businesses like Walmart, McDonald's, etc. in the US. Why? Because I'm already purchasing a lot of FMCG/defensive stocks in the Indian market. So I'm not bothered too much about investing in similar set of stocks in the US market. When I'm going to the US market, my goal is to identify the next big thing. So therefore, I buy risky stocks, for example, something like UiPath. Many of you have started fretting that Akshat, UiPath has lost a lot of value. Okay. UiPath has lost a lot of value, but these are all story-based stock. I have been saying it over and over and over again that if you go and invest in 10 story-based stocks, and even if 3 of them survive, those 3 will give you massive returns and will offset for the loss that you are making in 7 companies. Think about it this way, that when you are investing in tech, you don't need to find 3 Amazons. Even if one of the companies that you have picked becomes the next Amazon, it will more than offset the losses that you are making from the other 9. That is the philosophy with which you should be investing in emerging techs. But if you're of the view that, hey, I cannot see any volatility in my portfolio, especially around emerging techs, then these companies are not for you. You should not be investing in something like UiPath, etc. Think about it again from this perspective. Amazon at one point lost 90% of its value, and today it has become one of the biggest businesses on the planet. So that is the goal with which I'm going to the US market, and I'm okay taking that exposure, taking that risk. So I hope this point is clear. Let's move on to the second asset class. Okay, so regarding cryptos, there are 2 important points that I would like to outline. First and foremost is that I feel that the risk-reward equations on cryptos are very favorable. I'll explain it in very easy to understand language. So imagine this, that if you invest 100 rupees on cryptos right now, what is the maximum loss that you can take? It will go to 0. That's the maximum loss. But if the crypto market survives for the next 10 years, this 100 rupees will become 1000 rupees. That is the philosophy and that is the risk reward equation with which I'm approaching the crypto market. A lot of people start creating halla that Akshat, you know what, you're giving like bad advice. Crypto has no fundamental value, this, that. Okay, if you want to continue to believe that cryptos have no fundamental value and still they can survive for 14-15 years, then I don't have a good answer there. I've already given a lot of explanation about it, and every investor have their own perspective on investment and I have mine. So I'm not trying to push you in a certain direction. I'm genuinely telling whatever I am doing in the market. So this is the first key point. Second is that I genuinely feel that every generation gets an opportunity to invest and make crazy money from an asset class. For example, during our grandparents' time, that was the real estate market. That if your grandparents had purchased some property in any part of India, that property would have given you crazy returns now. Similarly, our parents, after the 92 scam that happened in Indian stock market, if they would have invested in the stock market, then net that generation would be sitting on a lot of profit in the stock markets. Similarly, I feel that our generation has the opportunity to make very good returns in the crypto market. Is it risky? Yes. Was real estate risky back in the 60s? 100% yes. Was stock market really risky in 92, 93 time when such scams broke out? 100% yes. So anything which is going to give you very high returns is also going to have element of risk. So what is my philosophy as a crypto investor? That I am betting on the entire crypto market to survive for the next 10-12 years. Whatever investments I am making, they will become 10x. So I'm only purchasing blue chip cryptos. That is where majority of my crypto money is tied into. I'm not looking for the next Dogecoin or Shiba Inu coin, etc. Yes, I do speculation for fun. I do invest money in some speculative coins in the DEXs or IDO spaces. In case you don't understand it, that's completely fine. You can consider taking positions in some blue chip cryptos in case you feel like. So currently my portfolio is 12 to 15% and over time I will pull it up to 20% and that is where I will stop. So this is what my philosophy of crypto investing is. So the third asset class in which I have invested is the real estate. Now in real estate, I only purchase commercial properties. I do not purchase housing properties. Why? I have made several videos in the past and you can watch that to get a better understanding. But there are a few specific reasons. First and foremost, I feel that if you have purchased a commercial property at a good location, it's very easy to rent out, and that utilization rate, that is the extent of time your commercial property is rented out. So let's say out of 12 months a year, it is rented out almost all the time. So that leads to stable cash flows. But that is not true for a house, because if your house gets vacated, it might get very difficult to rent out. I am presenting a general case. Please do not take it personally. My philosophy of investing in commercial properties is that I invest in tier 2, tier 3 cities and I end up purchasing prime commercial properties. Why? Again, because of cash flow and this doomsday scenario. So doomsday scenario means that if everything goes haywire, so the word of the day today is haywire. Let me know what does that mean. So if everything goes bonkers or haywire, I will at least be able to sit on a shop and earn my livelihood. So that is one of the reasons why I have purchased commercial properties. Now, should you also purchase commercial properties? It really depends. I generally advise people that if you're looking to purchase commercial properties, do try to buy it outright. You will only be able to buy it outright if you have a big portfolio to begin with. If your portfolio is not big, then first create a big portfolio and then start taking positions in commercial real estate and real estate to begin with. Otherwise, real estate is not a growth investment per se. It's mostly a hedge. It's mostly a cash flow driven thing. So that is the viewpoint that I will present on commercial properties. Now, my favorite investment is businesses. This is what my career is, that I am an entrepreneur. I build businesses. I have been building businesses since the time I was 20 years old. So that is what I'm passionate about. This is what I like to do. If you want to watch a video about my 17 income streams, you can go watch it here. It will give you more insights about the type of businesses I have built. But there is a core philosophy that I have followed in terms of building businesses. And that philosophy is called as value added approach. It simply means that in order to create any good business, you have to create value. So let's say that you create a value of 100 rupees. And from that, you need to capture value. So capturing value means that you have created 100 rupees and you go and capture like 30 rupees of value from it. So let me explain this point by taking you some of the businesses that I have started. For example, one of the management consulting oriented business that I started, it offered management consulting prep at roughly 1000 rupees per month. Now, this was an excellent idea simply because of the point of view that if you go and look for any management consulting oriented prep material, it costs at least $350 per month. So we were able to come up with a model which helped a lot of students also. We were able to create a lot of value also, and we were able to capture a lot of value. Same is the philosophy that I incorporate in terms of live courses. For example, you might have seen that I run a stock investing live course. I have deliberately made it live. Why? Because if you actually go and study the backend, you will realize that people do not complete their recorded courses. The completion rate of recorded courses is less than 10%. That is how bad it is. Therefore, I run only live courses. It requires a lot of effort, but that is me trying to add a lot of value. And I try to keep the price point as low as possible for a live course. So please judge it from that particular perspective. It is not about just launching courses at a very basic price point. It is also about the value that you get out of it, and people have really liked it, and therefore all my batches get full very, very quickly, even without running one single advertisement. Now I've done the same in the study abroad space also. So the new products that I'm launching, which will be launched subsequently in the next few months, you will see that even in the study abroad space, consultants charge 5 lakh, 6 lakh rupees for helping you apply to one school. I'm building products that will bring down the price point dramatically, and it will add up a lot of value. That is the simple value added approach that I take in terms of running my businesses, and I really enjoy building businesses that is truly adding value. So should you also do it, and what is the best mechanics? I will probably shoot another video if there is enough interest. But to cut the long story short, yes, building a business, it requires a lot of effort, it requires a lot of hard work, it requires a lot of blood, sweat and tears and knowledge. So you must start upskilling yourself. That is the first step. And then when you get an idea, try to jump into executing to the best of your abilities. Now comes my fifth and final investment, which is angel investing. So over the last 1 year, I have invested in across 10 different companies. I really love to support entrepreneurs. It is also an opportunity for me to learn about the innovation that is happening in this space, because entrepreneurs are trying to build innovative, disruptive companies. So I study this space closely. It enhances my skill set also. Now the perspective that I have is that whenever I'm investing in startups as an angel investor, I know for a fact that out of 10 investments that I make, I'll be very lucky to get returns on even one. But I still do it predominantly from learning perspective. Why am I highlighting this? Because many a times, many of you ask me question that, hey Akshat, should we as retail investors also try to invest in early stage companies? It's a highly risky game. Please only invest money that you're okay losing, because here we have to play that VC volume game. You need to go and invest your money across, let's say 100 companies, and then maybe 2 or 3 companies will give you good exits. So that is the perspective with which you should be investing. You should also understand the type of business ideas that you're okay investing in. For example, my niche is education and finance. These are majority of the companies across which I have invested as an angel investor. So similarly, you need to figure out your niche, and whenever you are investing in these early age companies, go by what you understand. So in summary, you must figure out your own plan. Important thing is that you must discover your investing style. If you want to be a growth investor, if you want to be diversified versus concentrated, you must study all these aspects and then take positions accordingly. I hope you enjoyed the video. Please press the like button, and I will see you tomorrow.